Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. Hey, check out this new theme. The stream looks really good. Shout out to Julie from our side. She did a great job helping us to redesign some of our stream layouts. I think things are going to look really nice on the stream. If you've ever seen our website, this is another, again, shout out to Julie. She's done a pretty remarkable job in terms of making our stuff look so cool. Look, the EdgeFinder is really cool, but it's made even cooler by all of the great work done behind the scenes by our team to help, showcase all the things that we have to offer to traders. So anyways, now the streams are looking better. So shout out Julie. Anyways, let's jump into some charts, take a look at what's happening here this morning. And as we do get started, take a look at the S&P 500. Just shy of its all-time high. We had a little bit of a down day yesterday and some follow through, it seems like today. You're still just kind of wobbling at the all-time high. Haven't really made too much of a decisive move one way or the other. There's an interesting dynamic here where you have kind of this consolidation in the form of a wedge pattern, whatever you want to call this, but price tightening up here and sort of quieting down here, even though we are going into a new year. So we'll have to keep an eye on this, see if it can break one way or the other. But I think that if you're a bull on the S&P 500, we'd be looking for some sort of more significant breakaway, right? Some expansion in price rather than just kind of this really tight range we've been in. You'd probably want to see this resolve to the upside with a strong-bodied green candle to kind of solidify that, okay, the bulls are actually, here, they're going to continue to press higher for the market. So we'll see. But the bears, on the other hand, you'd probably want to see some of these higher lows that we've been forming. You want to see that break, right? If you're a bear, your worst nightmare is higher low, higher highs, right? Because that's just going to keep trending and trending and trending. And so, personally, the way I trade, I don't like to try and fight that kind of move. So, I'm in there buying those higher lows if I can help myself. And I think that if you're wanting to be bearish on markets, you probably want to see this structure start to fail out. And what's interesting is that the way to be bearish on a stock market is, in my opinion, it's a very select time. And people sometimes ask, they're like, Nick, why are you always bullish on the S&P 500? Why are you always bullish on stocks? Well, because most of the time you should be bullish stocks, because most of the time stocks go up. A vast majority of the time stocks go up. For the last 200 years, right? Stocks tend to go up. Same thing with gold. They tend to move higher. Why is that? Well, it makes sense. Companies get more efficient and more profitable. Economies get bigger, more money's thrown around. Population growth, right? More people spending money on the same products. Things should go up over time for stocks. That doesn't mean that they go up every day or every single month or every single year, but generally speaking, that's something that we don't want to fight. So I have to be selective. If I'm going to be bearish on the stock market, it's going to be a rare occurrence, and it should be. It should not be often that you're bearish. So if you're somebody who is constantly bearish on the market, you're fighting a very natural thing. Stocks tend to want to go up. Again, that does not mean they go up every day, and they can crash terribly. But the time to be bearish on stock markets is when the technicals, the fundamentals, and the sentiment aligns. So what do I mean by that? Well, technicals, lower lows, lower highs, right? Structure breaking. And we haven't had a prolonged bearish period since 2022. It's been years since we've had a market that actually stayed down for a while. 2022, I think it was like a year and a half before you got back to break even to the highs. So that was a downtrend, right? You actually had a downtrend for a change. Fundamentals, right? You want to see corporate earnings hurting, not growing. You want to see corporate earnings disappointing and missing expectations and being unattractive. You want to see the Fed either hiking interest rates or not cutting them anymore. You want to see a Fed that is not dovish, but actually more on the hawkish side. Now, these are things that you want if you're a bear, I should say. Sentiment. You want to see big money selling, getting out of the stock market. You want to see the crowd sentiment still chasing, right? You want to that's the dynamic. That scenario is not that often that you get the combination of all these things at once. And so the reason I'm going through this is because you often see on social media a lot of people who are, basically always bearish. They're always pointing to the doomsday event that's around the corner for the stock market. And the reason I think that's a really dangerous way to think about markets is because you can spend years. I mean, think about this way. This is kind of a more grim way of thinking about it. The people who remain permanently bearish on the market all the time, calling for a crash, it's all going to come crumbling down. How much money have those people, either missed out on themselves or influenced people into thinking the same way to ultimately they made a decision to stay out of the markets or to short the markets? Basically, how much money has been lost due to perma bears, right? People who they're always doomsdaying all the time. Why do they doomsday? Well, I'll tell you, the reason they doomsday post all the time is because those posts do better. I can tell you, I know it personally. When you create content that is, very negative, very pessimistic, very worried about a crash all the time, you get way more views because people are more naturally worried. They're like, oh, what the market's going to crash? I got to click on this video, right? I got to watch this video. Look, I make exciting thumbnails and titles too, but I am absolutely, if you watch my videos, I am not a perma bull or a perma bear. I follow trends. Right now, it just so happens that we've been in a monster upward trend, and I do not want to call the top. And I have not called the top. And that's been one of the best trading decisions of my life, has been to not call the top on gold, to not call the top on S&P 500, to ride trends, not try and predict everything. Does that make sense? Nick, I want to say thanks for the Oanda recommendation. Yeah, they're great, man. I've traded with Oanda for years. For a long time. If you're not using them, if you want to check out Oanda, if you're a US trader, let me see if I can drop you the link. Hold on. Do we have Oanda here? I don't have it on I have a little Stream Deck. I'm not sure if you guys have used a Stream Deck before. It's pretty cool. It's this little thing that sits on my desk that I can click buttons on and like grab links for people. Anyways, I'll drop this really quick. So if you're looking for a better brokerage and you're a fan of the show, a couple things for you. Click this link and check out the different brokers that we have available by country. Now, the reason I encourage you to do this is, number one, they are referral links. You'll be supporting our show, and I greatly appreciate it. But for your sake, we have put together some really great offers with all these different brokerages, welcome bonuses, deposit bonuses, things like that, and then free products, things like that. Explore this page, because I say this all the time. One of the biggest mistakes that so many traders make is they switch brokerages, or they get a brokerage account going and they don't take advantage of the perks that people are offering out there. My team and I, we have put together with tons of different brokerages. We have put together special offers for you guys to get extra perks when you sign up using our links. So it is helping us, but we in exchange are trying to help you guys by getting you something with your sign up. So for example, sometimes they'll be offering like sign up bonuses. Like for example, if you go to Eightcap, you can get a free EdgeFinder if you sign up and deposit like $10,000 or more. So if you're looking to make a brokerage switch, don't just do it, right? Do it and make sure you get something out of it. If you are depositing into a brokerage, you are a valuable asset to them. Get something out of it. Is that a TradingView shirt? It is. It's kind of a flex because they sent it to me. I also have a TradingView sign, a neon sign, but one of the lights went out on it, so I've retired him for a little while. Maybe they'll send me another one. Full transparency, TradingView also gives me TradingView Premium, so I don't pay for that. So, oh, weird. My computer just did something really weird. Are we still good? Okay, good. My computer like froze for a second. Anyways, guys, we've got a few minutes here to go before we get on to unemployment claims for this morning. The other thing is, so I'm not a prop firm trader, but I don't know if you guys know this or not. I'll just share some wisdom with you. Everybody you see in social media that is a prop firm trader, they don't pay for prop firms. That's another little insight for you. I don't trade with prop firms. I have sponsors who are prop firms. I just personally am not a prop firm trader. But just so you are aware, I think it's fair game to say this. Influencers that you see trading with prop firms don't pay for prop firms. Can you guys still see the chart? Are we still good? Somebody said the chart is frozen. Can you just let me know if we are okay? My computer just did something really weird. I want to make sure you guys can still see and hear me. Nick, can we go over the put to call ratios? Yeah, let's do that. That's a great idea. So hopefully you can see my chart. Also, I need some feedback in terms of this organization thing that I'm trying right now. If you're an EdgeFinder user, oh, wait a second. It is frozen. Hold on. Let me try this again. I think if I re-share my screen, it should fix it. How's this? I think that's good. Can you see it now? I think we're all good. Can see and hear you, but okay, yeah. That must have been my computer like did something weird. Okay, so in just about a minute and a half, we have unemployment claims. So I may come back to the put to call ratio, but I do want to check it myself. So don't worry, we will go there for sure. What tools and websites do you use for analysis? I used to use like 50 different sites where I'd read articles and, by hand write down latest economic stats. And it prompted me to build the business that I have today, which is A1 Trading, where we build tools to automate that process. I use one software for my analysis on the fundamental side, EdgeFinder. Over and over, day in, day out, I don't use anything else. It's all I need. It is concise, it is automated, all the data gets pulled in, and I get a bird's eye view of the macro fundamentals and an output bias for everything that I trade. Is that a sales plug? Absolutely. Buy the EdgeFinder. It's worth every penny. Okay, so let's see. We've got unemployment claims coming out in 30 seconds. Let me switch over to this view so we can watch the market across the board. So on your screen, you've got S&P 500, you got NASDAQ, Dow, Bitcoin, dollar, gold, silver, and oil all on the screen right now so we can watch the reaction to unemployment claims, see if there's anything of substance here. We should see some kind of movement. Just depends what claims come out to be. Claims should have dropped just now. See if there's any movement. Remember, news for people who are newer to macro, markets move on news only if, or mostly if, they are substantially surprising one way or the other. Got 208 in the chat. Let's take a look. So 208 came in better than expected. So unemployment claims, a little bit better than expected. Trade balance came in better than expected. Preliminary unit labor cost came in lower than expected. Okay, so what would we derive from this 208 number? Let's break it down really quickly. Unemployment claims are a weekly jobless claims number that gets published, and it tells us the number of people claiming unemployment. And so what we could see here is that we were forecasting, or economists were forecasting, for 213,000 unemployment claims. We came in at 208, slightly lower or better than expected. It's not a big surprise though, a couple thousand. That's really not going to move markets much. So yeah, something to think about. I recommend the EdgeFinder even though I don't have one. If you need a payment plan, send us a direct message. It's a great way to get access and pay it over time. A lot of people are doing that. We had a lot of people in the last few months sign up with our kind of payment plan option because, you know, we recognize not everybody can afford that full price right away, but splitting it up into 3 months is a lot easier. Okay, so overall, pretty unchanged, not a big movement there. Unemployment claims came in slightly better than expected here this morning. And let's see the reaction to the market. S&P 500, NASDAQ, pretty unchanged. Dollar index, still grinding higher. Watch the dollar here as you come up to this area. You are seeing a little bit of a break to the upside here. So I am long gold, so I'm preferential to a dollar move lower. But let's just take a look at the economic heat map. So fundamental analysis, economic heat maps, US economic heat map. I feel like that organization makes sense, right? If you're confused of what I'm referring to, on the left-hand side of the EdgeFinder, we have built so many tools that organizing the tools has become a project in itself. I feel that we're on the right track with this new way of thinking. I did get some comments from EdgeFinder users. And if you are an EdgeFinder user, please drop a comment on my videos. Send us a message in the Discord group. Like, help me out with this because it is hard to see from my perspective what users of the EdgeFinder think and feel about what changes we make. Like, I always encourage, give us feedback. What do you want us to add? What do you want us to change? We may not make every change because, of course, we have many conflicting people's views, but we tend to do what the crowd sentiment wants us to do. So this new way of organizing, I feel, is pretty intuitive. Like, if you opened up EdgeFinder for the first time, this is a little less intimidating than, you know, having everything mapped out like this. Like, I feel like that's intimidating where you're like, oh, I can't even read stuff. But if it's more bite-sized, you're like, okay, I'm interested in fundamental analysis, economic heat maps. All right, US economic heat map. I feel like that's bite-sized enough. UI design it's actually really hard. So we need some kind of search function, Nick. If you're looking at top setups, you do have a search function. If you go top setups, you can search right here. So if you're interested in a specific type of market, so like, let's just say, I don't know, let's just say you're trading USD pairs, USD, boom, only look at USD pairs. You see what I mean? So you do have a search function on the top setups, but maybe you mean somewhere else. Anyways, back to the US economic heat map. Let's take a look at the dollar. And I can build a case here for why overall the dollar still looks bearish for me. So if we take a look across the board, we have GDP statistics that look strong. Manufacturing PMIs missed expectations. That's bearish. Services PMIs were strong. But then retail sales weak. We'll get some new data on that pretty soon. CPI coming in cool. I think inflation is going to be a big reason that I'm going to kind of stay on the bearish side of dollar. Because inflation cooling suggests, okay, jobs market's not particularly incredible. I mean, look at the data that we got this week. JOLTS job openings missed expectations. That is bearish for the dollar. ADP, right? ADP came in softer than expected. So for a while, the last few months, we've had pretty good data for the dollar and an uptick in the dollar and strength. And then about 3 or 4 weeks ago, we started seeing data that creeps in that starts to look a little bit more bearish. And so I've tilted more in the direction of thinking, okay, now we have some downside here, right? So just watching the macro trends to me is much better than anything else, right? Just following the macro trend. And then using price trend as well, right? We don't want to just fight an uptrend because you can sit around for months trying to fight an uptrend. Instead, wait for a downtrend, wait for the macro. All right, we got everything aligned. Looks good. You want the dollar to go down because you're long other stuff. I guess, yeah. So anyways, the big picture here for me is when we look at the dollar, we have overall a pretty bearish outlook. So yeah, I do continue to think that the dollar has downside here. Unemployment claims were slightly better than expected, but again, we had mostly negative job statistics. However, we don't want to fight technicals either, right? So we could, even though I'm relatively bearish on the dollar for now, we could still see this thing head back up to retest like 99.40. However, I wouldn't draw the conclusion that we've completely broken out either. We're still sitting right here at resistance. Oftentimes when you have a resistance zone, you'll test the upper limits of it, right? So we are right here at a resistance point. So we'll see. It's decision time for the dollar. If you break higher, you very well could spend another week or two making a move up to that 99.40 level or so. But yeah, we will see. I do have a couple dollar trades open. So I am obviously long gold, which is by proxy sort of a soft dollar short. And then if we take a look at the NZD USD, this one has come back to break even for me. So started out nice, but back to break even on this trade. Although I did take partials, so I took half my profit on this one. And I've still got the rest of the trade running. So if we come down all the way, then this will just be a scratch trade, break even across both positions. The two trades that I took, two entries long, took profits on one, holding the second one. And if they turns out to be negative, then it's just a break even trade pretty much. So we'll see. AUD USD also making a little bit of a grindy higher high here, higher low. Let's see if there's anything on the top setups for the dollar pairs. Major currency pairs. So yeah, AU and NZD USD both looking good. So if I look at the Australian dollar, I like this chart quite a bit. You have some support here that seems to have formed right around this 66.70 level. So it could be something here. I'm already long Kiwi dollar, so I probably wouldn't take this trade simply because AU and NU are very, they're pretty correlated, right? So, but I do like that setup. Looks good. I'm sorry, there's a bunch of comments I'm missing, so I'm just trying to keep the stream moving. This is the first time I'm seeing the reorganization of the EdgeFinder without studying it in depth. It already looks better, more proficient than before. Thumbs up, A1 dev team. Thank you very much. I appreciate that. It's hard, like when you are designing something, to put yourself in the perspective of people who are using it, right? Because when you're designing something, you know the ins and outs, but when you're designing it for an end user who doesn't necessarily know every corner of the EdgeFinder yet, it's an exercise that requires a lot of due diligence. So I'm really trying to design this thing in a way. The team and I, we are trying to take surveys. We're trying to collect feedback from people who use EdgeFinder. I mean, all we do, everything that we do with this product is in an effort to make it the best possible thing for our customers. So it is one of those things. We're trying to organize it so that people can find the data that they need to help improve their trading. So if you ever have a thought on, hey, add this to the EdgeFinder, or hey, can you organize it this way? Again, we are not ignoring you if we don't make the change that you requested. You have to also understand from our perspective, we get like hundreds of comments of like, hey, can you add this? Hey, can you change this? And there's only a couple of us on the dev team. So we do as much as we can, as fast as we can, but we don't make every single change because we do kind of prioritize changes that a lot of people keep reiterating. If everyone's saying, hey, this color code or this color exchange doesn't really make sense, or this page is confusing, then we listen to the crowd sentiment the most. So anyways, let's go back to our top setups, see if we can find anything else here to see on today's watch list. I'm going to get rid of neutrals and just kind of filter here. So we talked AU, that looks pretty good. Silver and gold both still look good. Kiwi dollar looks good. I do like NZD USD. I'll stay with that trade. Unless it stops me out, then I'm out. There's a lot of menus to go through. How about letting people edit the menu according to their needs? So the software that we've built this in doesn't allow for like customization in that way. I agree. That would be a really cool feature. But since we cannot make it so that like the individual can make edits to their local version, since we can't do that, the next best thing is to make it so that finding the menus or make the menus much more organized. And I wouldn't say it's fully done, but I think we're on the right track with this pathway, right? We know that the big prongs of EdgeFinder are technicals, sentiment, and fundamentals, right? So that's what people care about. Being able to walk through the menu through this selection process, I think is the right path. Because there's, actually many different ways you could do the menus. We could go technical, sentiment, fundamentals. We could go just sort of lay everything out on one long menu like we did previously. But I think I've opened up some other people's softwares before, and I know what it's like to open up a software and see 37 menus at once and be like, what the heck is that? So my goal is like, okay, you pull up EdgeFinder, give me the summaries, give me the high level stuff. And then if I want to dig deeper, let me dig deeper and deeper. I think that's how we want to build it. Are you going to add new tools in EdgeFinder? Damien. Come on, Damien. Of course we are. All the time. And also, sometimes adding new tools is actually just going back and rebuilding tools better. We said we were going to do the put to call ratio. Let's do the put to call ratio. So here's how you would find put call ratio, which is obviously a sentiment gauge. Okay, sentiment analysis, crowd sentiment, put call ratio. I feel like that was a logical conclusion. For example, Damien, are we going to add new features? Not always necessarily a new feature, but I think an improvement to the feature with the put call ratio is something really simple. We changed this from a jaggedy line like this to a sort of square looking line, which I think helps you to visualize this thing a little bit better. So let's take a look at the put call ratio. If you're not super familiar with this, we'll just give a high level view. This looks at the options market flow for the selected asset. So we're looking at S&P 500. We could look at gold. We could look at NASDAQ. We'll do a couple in just a second. Put call ratio shows you the volume of puts versus the volume of calls each day. It is a daily indicator, and it shows crowd sentiment in the form of options buying, right? So if everybody's rushing to buy calls, people are super bullish on an asset. If everybody's buying puts, people are bearish on an asset. Very simple indicator. Let's look at it. And what you want to keep your eye on is if this thing crosses above the red, that shows you that a huge surge in put volume took place on the selected asset. If this thing shoots lower, that tells you that we had a standard deviation extension beyond in the call direction. So a lot of people bought calls, right? What we find is that this indicator is really interesting at looking at crowd sentiment, because it's actually been spot on for many trades that I've taken. Some of my best trades in the last year have been through the put call ratio in combination with overall EdgeFinder scoring. By the way, put call ratio is implemented in the top setup scoring. Crowd sentiment uses put call ratio for this selection. Okay, so let's talk about this. Also, I need to add the scoring button here for this, because what I just explained needs to be added there. I love my job. Okay. With this said, put call ratio, let's check it out. So we have for the S&P 500, seems like we had an upshoot yesterday in put volume, but we're not quite at super extreme levels. So I would say that neutral sentiment is fair conclusion. Let's look at NASDAQ while we're at this. Okay, NASDAQ's similar. We did have a big surge in call volume, but we've kind of cooled off. So crowd sentiment is neutral. Another thing I want to add to this, put call ratio is one of my favorite indicators, by the way. I think it'd be cool to add like a summary right here, like latest sentiment, bullish, etc., something like that. I feel like would be a cool indicator. NASDAQ, all right, NASDAQ's neutral. What about gold? Gold also neutral. Dow Jones yesterday, let's see if it's still there. Not anymore. Okay. Yesterday, I was looking at the put call ratio. Dow Jones was very bullish. So let me show you something interesting. Last few days, call volume went off the charts, right? Or got very steep. What you can see here is that as call volume in the last few days spiked for the Dow, notice something kind of interesting. So what I'm showing you is that call volume spiked right here. People bought calls like crazy. And so what we see so often on the put call ratio is that right as the crowd gets that very euphoric bullish bug and goes and buys calls, right? People are out there buying calls, looking for a further move higher. A lot of times it's actually a short-term topping signal. So we've seen that. We've rolled back over. So as we've rolled back over, our latest put call ratio has shown sentiment has gotten a little bit more neutral. You see how we did that? If the put call ratio, help me out. I need your feedback on this. Give me a 1 in the chat if that explanation, our discussion around put call is making sense. If that was helpful, give me a 1 in the chat. If this is just confusing to you, give me a 2 in the chat. I appreciate the feedback. It's just, it's a way to let me know if what we're discussing is making sense, if it's simple enough. It should be simple enough. Indicators should not be confusing. Okay, cool. We're getting a bunch of 1s. So thank you very much for that. Let's just take a look while we're at it at a couple things. Russell's also interesting to me because I am long Russell. Neutral sentiment. We did have a big spike in bearish sentiment on the put call ratio. Though in recent times, we've had a pretty muted put call ratio for this. Does put call work with all assets? No, because not everything has, it depends on what's traded on the options market. And specifically, we use a lot of ETFs for stuff. So like, for example, US oil, we use USO. Interestingly, crowd sentiment here, kind of neutral on oil. And it is kind of rare that you're going to get an extreme blowout in one direction, but they do happen. You can see some days you'll pull this up and you'll see that there was a huge surge in put volume or call volume, and it can be really interesting. Interestingly, and I use it as a contrarian indicator. So also we use IBIT for Bitcoin. So this is a good way to gauge sentiment on Bitcoin. In fact, this is the best way I know to gauge sentiment on Bitcoin is to look at the put call ratio. If you're a trader, now, if you're longer term, like if you're an investor, there are probably different ways to look at crowd sentiment from a longer term indicator. But the put call ratio is especially good for traders because it gives you that short term burst in activity that you can see visualized on a really simple chart. So recently we had a surge in call volume. So just something to think about, right? Is to keep an eye on this. When it reaches extremes, for me, that can be a decent time to consider trailing stops, profit taking, or even selling an asset. And then when it surges to the upside, that can be a profit taking on short positions opportunity, trailing stops on short positions, or even indicating maybe a time to potentially look for longs, right? It's a contrarian indicator. Do you think put call works better on indices and commodities? So put call ratio, I've used it for most of the trades that I do. I mean, well, it's only for, here's your list, right? You have Bitcoin, Dow Jones, gold, NASDAQ. I use it for all of this. It's one indicator. It's not the holy grail. We, in combination, add it into the EdgeFinder scoring. See this right here, this crowd sentiment? That crowd sentiment for a lot of assets, not currencies, but for everything else like gold, oil, NASDAQ, that's using the put call ratios to build a crowd sentiment gauge. See what we did there? So if it's getting a neutral reading, then it gets a 0. If it's getting a really high amount of puts, it's getting a bullish reading or a +1 or a +2, and then the opposite for high call rating. But it is one of the sentiment gauges within EdgeFinder scoring. So if you take a look at S&P 500, still kind of flat here on the day. Dow Jones, slightly red. I'm still long Russell. Also keeping an eye on this 4-hour time frame as we come back into this area here. Let's see if we can get some kind of a lift off here, maybe head back to all-time highs. Do you think that Russell wants that? So we'll see. By the way, I should mention this. We're doing a giveaway inside of our Telegram channel to give away a free copy of the EdgeFinder. If you are not in there, take a second, scan the QR code that is right below my camera here. If you scan that, it'll take you to our Telegram channel. I'll also drop a link here in the chat if that is easier for you. Give me 1 second. Here it is. Join Telegram here. Okay. Click this link right here. So either scan the QR code or click the link that just got dropped in the chat to join our Telegram channel. We just kicked off a giveaway for the EdgeFinder. So if you want a chance to win, throw your name in the hat. Join right there. That way, you also get to read along with our daily updates in terms of macro. If you're trying to learn this stuff, it's a great thing to join the Telegram anyways, just because, again, we get bonus clips in here. If you're really trying to learn this stuff, you don't have to spend a dime to learn macro and to learn the stuff that we talk about. There is no paywall in terms of my strategy, my approach. Obviously, the EdgeFinder is a paid product. We've worked incredibly hard over the years building this software, but you can still watch and learn for free. And I would highly recommend that if you're looking to learn for free, join the Telegram as well, because we post daily updates to keep things simple in there. So there it is in the chat. Okay, so I'm still long gold. I'm looking for, on gold, I'm not going to move my stop loss unless we can get a break through this all-time high. So I'm looking for this kind of move. If we can round off, we seem to be trying to hold support currently on like the 4-hour time frame. We'll take a look at that. I'm looking for this kind of move. We can break through the highs, any sort of higher low there. I'm going to look to trail stops into profit. I pour my heart into the analysis. Join for free. Yes, yes, indeed. Yeah, Alan does a lot of the writing within the group, and it's excellent work. So join for free and read along. Okay, so let's take a look at that 4-hour time frame for gold as well. I think when we're looking this on the 4-hour time frame, something kind of interesting is taking place here. We may be headed back to retest this area. Just going to clean up my chart a little bit. Okay, so 4-hour time frame, we are potentially retesting. I think this is probably a 50% retracement on the 4-hour time frame. But currently testing the 38.2. So we've got this area currently being tested. My educated guess, and it is an educated guess, but it is a guess ultimately. Nobody knows for certain what price will do. This 38.2 to 50% retracement zone looks pretty good for possible continuation plays on gold to the upside. You might say, well, is this a lower high? And the way I think lower highs should be looked at is a lower high is a trend, a lower low, lower high, higher low, higher high. These are trending terms. What does that mean? It means that they should be lagging. They should not be leading, right? When you are trend following, you're looking at a lagging indicator. The trend is a lagging indicator. And people say, oh, no, I don't want to trade with a lagging indicator. That's bad. It's going to mean I'm going to... No. Lagging indicator is a term people are afraid of, but they shouldn't be. Lagging indicators are pretty much everything in markets. Most things are lagging indicators. People have this weird phenomenon where they overvalue the concept of a forward-looking indicator and they undervalue the concept of a lagging indicator. Let me explain. If you think that a forward-looking indicator means that it is a crystal ball and it knows what's going to happen next, you've been misled. And if you think a lagging indicator is completely useless because it's looking left on the charts, then price action traders, we need to have a serious conversation, because price action is always lagging. You are always looking left. If you're looking left, if you're looking in history, or you're looking at anything behind this current second, you are trading using lagging indicators. Price action is a lagging indicator. You can say it however you want, but just answer this simple question. If you are looking backwards at all, you are looking at historical patterns. You're looking at, that is a backwards looking indicator. It doesn't mean it's bad. It doesn't mean it's useless. I'm just saying this term of lagging indicator, it's worthless. Indicators are worthless. Get that out of your head, because that is a dangerous thinking. Forward looking indicators are not crystal balls either, right? Forward indicating versus backwards looking are just terms, but neither is necessarily good or bad. Real quick example. During the S&P 500's major drop last year, you ready for this? During this drop, lagging indicators such as GDP statistics, unemployment rate, all sorts of different economic metrics that are considered lagging indicators or slow data, suggested that the economy was okay and that this was a buyable dip. So, lagging indicators said buy the dip. Do you know what forward indicators said during that time? Sell everything, it's going down forever. Not necessarily exactly like that, but consumer confidence, a forward-looking indicator, which asks people, hey, how are you feeling right now about the economy? The services PMIs, the manufacturing PMIs, these are forward-looking indicators. These are surveys that ask intelligent people, where do you think the economy is going? Guess what those indicators said during this time? The forward-looking indicators suggested the market was going to go lower. The lagging indicators suggested the market will go higher. Lagging versus forward-looking sound really misleading to what they actually are. This is more of a predictive set of indicators. This is a more reactive set of indicators, okay? Both can be good, both can be bad, okay? If you are somebody who is one of those, oh, I don't use backwards looking or lagging indicators, then I'm telling you, you are very much missing the point. Lagging indicators can be excellent. Seasonality is a lagging indicator. Technical price action, 100% a lagging indicator. You're relying on past historical studies to try and predict the future, right? Lagging is perfectly fine. Just test your theories. Back test. Does it generally... Back testing, lagging indicator. Everything where you're looking at history, which is all we have to go off of, by the way, for the most part, is a lagging indicator. So get this idea of lagging indicators are bad. Remove that from your diction as a trader, and you'll be better off. So with that said here, guys, we're going to toss the stream over to our next show host. We're missing our producer here today, so I'll have to do the transition here. No worries. Before I do that, let me just remind you guys, if you're not in our Telegram channel, scan the QR code below or click this link that's being dropped in the chat. Specifically, we are doing a giveaway within the Telegram channel right now for a copy of the EdgeFinder. If you want a chance to win it completely free, join the Telegram and then enter the giveaway. We'll be announcing that winner next week, so don't miss your chance to potentially win a copy of the EdgeFinder. Okay, guys, up next, we've got Marco taking over the stream here to talk more trading setups that he is watching. Give me just a second. I've got to find our transition scene, and then we will get that into motion. Check this out. Stay tuned. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, Eightcap. Eightcap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with Eightcap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/eightcap. That's a1trading.com/eightcap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new Eightcap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/eightcap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/eightcap. Now back to the stream.
Hello everyone, welcome to my segment. Let me just check if everything is set up correctly. Yes, it is. So welcome. Silver on the screen. I'm short. Finally, it's falling. Is it a good trade so far? Not really. So I had the right idea at the beginning, but then we had the US-Venezuela drama. We had some more things, like right now you have the US capturing a Russia oil tanker, or an oil tanker that is at least like sailing under the Russian flag. So that all creates uncertainty. You know what uncertainty means. Uncertainty usually means a risk-off environment, and it means gold and silver go to the upside. So that's a bit problematic for my position, but looks like the bears are hammering silver so far. Today is the first day that the big indexers start to rebalance their portfolios. So I've been talking about it for a while now. Okay, been talking about it for a while now. But basically, this is the first day. So Thursday, it started, and I think silver is gonna continue going lower on top of that. So how much selling is being done? I think should be about 4 to 5 billion, if I'm not mistaken. 4 to 5 billion of silver in the futures market. Now, the daily volume of the futures market is around 100 billion, so it's not such a huge impact, but usually they do the selling right at the close, at the market close, the daily close. So when there's less players in the market, less liquidity, and the movement can be larger. So I'm keeping the trade open at least for January. We'll see what happens. Again, if we continue with the risk off, that is troublesome. That could be problematic for my position. So that's the first position I have. Then we have NZUSD. Unfortunately, looks like it's going to hit the trailing stop loss. Not so great news for the New Zealand dollar. I didn't capture any profits here because I wanted to let the trade run. I wanted to use a trailing stop loss. Looks like it's going to be a small loss in the end. Part of the game. Again, you can never time these things properly. You can never time these things so that you can capture most of the profits. If I caught a take profit here at a 1 to 5 to 1, then maybe the price could be flying to 3 to 1, you know? So it's all about being consistent. If you make a decision, if you have a trade plan, you need to stick to the trade plan. So NZD seems to be approaching the trailing stop loss. Aussie dollar down as well. We had some negative news out of Australia. If we jump onto the Forex Factory calendar, we had some Aussie news, but I can't seem to find it now. So maybe it's under financial juice. Let's see. Breaking news. Let's take a look. Forex. I saw some Aussie trade balance, I believe. That was negative, or at least lower than the forecast. Let's quickly go through this. Yeah, here it is. Australian imports, exports, trade balance. So trade balance much lower than the forecast. Exports much lower than the previous number, actually negative. So let's see what the EdgeFinder says for Australia right now. If we go to the, let's see, economic heat maps, Aussie. Let's take a look. So as far as the Aussie goes, we have fallen a little bit, especially on the CPI turns out to be bearish for the currency, manufacturing bearish, services PMI is bullish, but the GDP bearish as well. So the Aussie is losing a bit of a bullish signal. And again, the trade balance news did not help. Now, am I concerned? Am I gonna close this position? No, I still love the Aussie. I still think it is the most bullish currency going into 2026. And I do plan on holding it at least until the 15th of January. And then I may manually close it. So the trailing stop loss is set. I'm still short-term bearish on the dollar, although the DXY is catching a bid. So the dollar seems to be catching a bid right here. But yeah, I still like the position, still trailing it, still above the 20 MA, still rejecting the 20 MA here and here. Maybe it can happen again. Maybe we can just do a touch and go and continue going to the upside. As far as rest of the watch list goes, I have the pound Aussie. I'm actually looking to sell. If you go to the EdgeFinder top setups, by the way, don't go anywhere because today I will be giving out a DNA funded account for free. It is a, let me just check. It's a one phase 10K DNA funded account. So yeah, make sure you stay on the stream. I usually do a giveaway somewhere like in the middle of the stream. So in like maybe 5-6 minutes, that's when you can expect the code to be out. Pound Aussie. GPAUD. Bearish reading, which is great. I always want to have the EdgeFinder on my side. It's a massive, massive confluence for me to buy or sell assets. So what I would like to see in terms of technical analysis, I need to see a breakout lower from the range. So I'm not really going to slap this one on the watch list because it's not yet ready. But if we can break lower, break this level, retest, then it's game on. Pretty much game on. If I catch an entry around the 20 MA, I think it's a pretty fine entry. We have the EdgeFinder. The pound is the most bearish currency determined by the big banks. The Aussie is actually the most bullish currency determined by the big banks. I'm talking about JP Morgan, Citibank, Barclays, and the rest of them, the rest of the big players. So they love the Aussie. They hate the pound. Usually they execute this view at the beginning of the new year. Beginning of the new year, meaning January 2026. That's the first thing I'm watching. Second thing I want to see is UJ. Again, I don't want to slap UJ on the watch list just yet, but I do want to see a breakout higher and then a sell limit position. So I'm talking about the possible intervention out of Japan. Although they have kind of left the bond market in a free market. So if we go to US 10-year and we type in JP 30-year, this thing is flying higher. So the yield has been flying higher for a while now, which is pretty interesting. BOJ, one thing we know about the BOJ, they are very, very controlling. So they love to come in the market. They love to do a bit of manipulation. They love to do a bit of interference. So far, they have left the bond market alone. This could attract more investors in Japan to actually invest into Japanese bonds. Okay, bring some of the money back from the United States, because right now, Japan is a huge holder of US bonds, huge holder, and the US stock market in general. So this may bring some money out of the US bonds, out of the US stocks, into Japanese bonds or the Japanese stock market. I think the Nikkei actually did pretty well last year. Yeah, Nikkei looks okay. 2025 was pretty good for the Nikkei. But as far as UJ goes, there has been some talks of an intervention. So they still seem to be pretty hot to do an intervention on UJ. Now, what is the trade here? How can you exploit this possible intervention? I'm talking about massively, just a second. I'm talking about massively selling the dollar, buying the yen. How big can the move be? I would say 2 to 3%. If you do your back testing, do your research, you're going to notice the last couple of times that the BOJ did an intervention, it was around 2 to 3%. So the play is, if we go above 158, sell limit, limited risk, aiming for the bottom of the range, around 2.2, 2.3% move lower. I like it. So this is the general trade idea that I have. Again, I don't have a sell limit in the market, but if we get the price to go higher, and if we get more posts such as this one, let me show you what I'm watching. You go to market moving and you go to this one, Japanese Finance Minister Katayama. We have a free hand to take bold action on the yen. That means it's intervention time. So this is what you want to see. That's good for a quick play on USD JPY. If we break the level, most likely it's game on. Of course, all of the trades I take will be a signal in the A1 Trading Discord. If you guys want to join the A1 Discord or get the EdgeFinder, which I use on a daily basis to make trading decisions, you can do so with my discount code Marco. Okay, so this gets you 25% off. Link is in the description of this live stream, and see you guys inside. If you want the signals, definitely consider joining. Next up, what do we have? Gold, of course. Everyone loves gold. Gold down on the day, pulling back a bit. Am I concerned? No, not really. Had a trade on, got taken out by a couple of points. Unfortunate event, but not the first time it happened. Actually, like one of the, I think it's the 5th or 6th time that this thing happened in 2025. So I've already had a couple of cases where I just got taken out by a couple of points. That's why calling the direction is not so tough, but staying in the market, timing the entry is the hardest thing, because you can be right on the direction like 70 or maybe even 80% of the time, but your timing could be so wrong that you actually end up losing money. Because if your stop loss is too small, if you get taken out and then the price flies, so timing the actual entry is more of an art than a science, I would say. Calling the direction may not be the hardest part. That is trading. That's the reality. And yeah, that's why it's so hard, because again, NZD-USD, you can watch this position and say, should have closed at 1.5. But then again, the next trade might be a runner. The next trade might go to 3 to 1, 4 to 1, 5 to 1. And then you're going to be scratching your head saying, why did I close it at a 1 to 5? My trade plan was to trail the stop loss. So that's what makes trading tough. What's the remedy? Sticking to the plan. So you make a plan, you write it down, or you memorize it. Better to write it down, if I'm being honest. And then you respect it. If you open a trade and you say, I'm going to trail the stop loss, stick to it. Best way to go. Gold, what's the game plan? Well, I do have a sell position on silver. So buying gold would kind of work against that, because there's a huge correlation, of course, between gold and silver. If gold flies, silver goes up. If gold falls, silver goes down. So I'm not super keen on getting in on a buy setup. But then again, this uptrend is so good. This uptrend is so strong. And I would say this would be a nice area to try and get in, to try and get back in the market. Around the 20 MA, previous resistance becomes support, previous all-time high. So still thinking about it. Of course, if I do make a decision, there will be an update in the A1 Discord signals page or signals channel. So far, I haven't really made a decision. So I'm still thinking about getting in on gold. I'm definitely bullish. I'm definitely not looking to sell like I'm looking at silver. Silver for me looks super toppy, like a massive rejection candle, super impulsive. Wall Street Bets is extremely bullish on silver. You know what that means. Retail is super bullish. You should sell it. You should go the other way. Always do the opposite of retail, but do the same as the institutions. That's why on the EdgeFinder, you have actually a COT reading, commitment of traders, where if they buy something, you get a bullish reading, but crowd sentiment, if the crowd is buying something, you want to get out. Okay. So let's see about silver. What is the crowd sentiment? Crowd sentiment is actually pretty bearish right now, it seems. Okay, that's another confluence, but I would say Wall Street Bets is super, super bullish, at least from the research that I did. So Wall Street Bets, pretty bullish, which is a warning sign. And this price action to me looks like Bitcoin in 2018, Bitcoin in 2021. Again, I'm not calling for a crash on silver. I'm not calling for a 40% correction, but just give me 10, 15%, something like that, to my take profit. Okay, maybe a 20% correction. But again, long-term, definitely bullish. Long-term, absolutely bullish. I just think it has overshot a bit. And now it's time for a bit of a cool off, a bit of a reset to get the weak hands out, and then we go back up. And probably I won't hold this trade more than the month of January. I'll probably close it after January ends because I'm betting on this whole rebalancing thing from the massive portfolios. But then US Venezuela drama messed up my position. Well, it happens. So yeah, gold super bullish, considering buy setups. Now it's time for the giveaway. So the fastest hands will get the free challenge. What I recommend, go to the DNA Funded website, DNA Funded, and go to the checkout page. Again, this is gonna be a 10K one phase account. Okay, 10K one phase account. So let's begin. I'm gonna put the code into my trading view. Let me just copy and paste it. Let's see the first one here. Of course, I sent Max the code 2 minutes ago. So he's gonna be the first one most likely. Just kidding. I didn't send it to Max, but he's very fast. So he usually wins. This is the code. So 10K one phase account. Make sure you use it, or make sure if it works for you, make sure you put the comment on the live stream. Okay. And also about DNA Funded, if you're looking to get a prop firm account, if you're looking to expand your trading capital, maybe get one of the bigger ones, 25K, 50K, 100K, we have a discount code A1 Live, which gets you 25% off. So 25% off A1 Live, DNA Funded. This is my personal 50K account, past phase 1, past phase 2. Now it's a funded account, and I'm in drawdown. So didn't reach a payout yet, but again, battling it out in the markets. I have a buy on the SPX, I have a sell on EJ, both trades in profit. Pretty happy about it. Let's see what happens. And if you want to get updates on this, every single live stream, I just pull up my dashboard and I show you what is the progress. So currently I'm in drawdown minus 2.5K. So this is the code for the free challenge. This is the code for 25% off. Let's continue with the regularly scheduled program. Okay. So comments, time for the comments. Let's see. Time for the comments. Cycling Club, welcome. AV, welcome. They all thought you were a madman for shorting silver. Horrible trade, Marco. Don't be so hard on yourself. Hey, Marco, I'm also in that, as shared in the Discord. Max, are you in? Are you in silver or a Forex trade? Tony Stark, welcome. I have quite a few Swiss trades, and I don't know what to do with this rising VIX. Dollar looks like it's flipping bullish. What do you think of the DAX? DAX looks pretty good. DAX, or it looked pretty good. I mean, it still looks pretty good on the daily chart. So definite outperformance of the NASDAQ, of the S&P, of the Nikkei. Nikkei now looks flat, S&P flat, NASDAQ not near all-time highs. Dow Jones is okay. So the Dow is good. Russell a bit flat. DAX just moving up for some reason. I don't know why. Again, I only have a limited amount of mental capacity, so I didn't do any research on the DAX, but I've been closely watching the price action, and it looks pretty healthy. Two things I would like to see. First, if we can get a reading, a bullish reading on the EdgeFinder. So far, it's neutral. That's a problem. I don't want to go in. So if we can get a bullish reading on the EdgeFinder, and if we can pull back to the 20 MA or to this level of support, previous resistance becomes support, I think taking a stab at it could be good. Could be a nice setup, could be a nice trade. I'm going to do some more research. I'm going to see why the DAX is flying, or if there's a reason in general. Maybe there's no reason, no apparent reason. Maybe there's just buying for the beginning of the year. But most of the time, if the price action looks like this, there is an underlying reason for the move. So possibly looking at an entry. Let's actually put an alert. Yeah, alert is in. So natural gas, people get constantly trapped because they jump on a series of up and down candles. Where did you get the news from? Big banks? I got it from Brent Donnelly, okay, for free, actually, in his Friday newsletter. This is the guy. He has a free Friday newsletter. You can find him on Twitter. Great analyst, great trader as well. So an absolute rock star in the space. He wrote Alpha Trader, the book Alpha Trader. Use massive stop losses and you won't get stopped out. Yeah, but I won't make any money. I'm sorry, but you all have been calling for a correction on silver and gold for a long time. I haven't been. This is the first time I did it. So yeah, first bet of the year. Timing is everything, or was it last year? Sorry, I took it in 25. Timing is everything. I lost on US 30 yesterday. I got stopped out on a fake out before the crash. I've been in the short for hours and then got stopped out. Okay, looks like someone got the code. Congrats, great work. Max is not playing, so you guys have a chance to actually grab a code. What's up, Marco? Any thoughts on the pound Swiss? Max is in silver. Awesome. Okay, awesome to see that. And that's a good sign because usually Max is correct. Pound Swiss, yes. GBCHF. So pound Swiss. Not my favorite thing in the world. GBCHF. Let's see the reading, neutral reading as well. In my opinion, neutral reading combined with flat price action, combined with the lack of narrative around the Swiss right now. I'm bearish on the UK, so I'm bearish on the pound. But for the Swiss, I don't really have a narrative going at the moment. So I'm not in favor of doing anything here. US dollar gaining strength. Looks like the DXY is gaining strength into this new year. I'm slightly bearish. I mean, rate cuts are coming, but we need to watch out for the NFP. What we had yesterday on Wednesday, we had the ISM services PMIs, we had the jolts, Services PMIs came in bullish for the dollar. Jolts came in bearish. Mixed signal, the market decided to look at the ISM services. That's an interesting take. I personally would think, and my research is telling me that jolts are a bigger market mover, so there's usually more movement if the jolts do something. This time the market counted the ISM services as pretty important, so they came in a lot higher than the forecast, I would say, and the market loved it. So we went flying higher. I think I can even show you here. Yeah, see jolts and the ISM services. So USD up and away. Could be a bit of risk off play. You know, the general rule is risk off, gold goes up, silver goes up, the dollar catches a bid. US Venezuela, tensions, uncertainty, risk off market. So this could be because of the US Venezuela thing. This could be because the US captured the fake Russian oil tanker, creating more uncertainty. By the way, I did some more research, did some more reading, and I think the whole event, US Venezuela, should be bearish US oil. So I would say for now, my view is bearish on US oil, and I do think it's going to continue going lower because the supply is increasing. Okay, so there's going to be more oil. They're going to pump it up, I think, even more, and the US is obviously going to help kind of take over the fields. They have all of the expertise, they have all of the tools, all of the equipment. So supply goes up, price should go down. That's at least what the analysts that I follow believe right now. So most of them are short oil, but they're actually bullish on gold, which I'm definitely bullish on gold going into the new year. Silver, though, I saw a lot of them are bullish on silver, but I would say that I'm kind of bearish. Okay, so I'm kind of bearish on silver right here. Just a second, I need to send a message. Okay. So we have 2 minutes more, and then I believe that James is coming after me. Let me just check the schedule. Yeah, James is coming on in 2 minutes. So to wrap things up, we covered silver, covered gold, US stock market. My main interest is on the NASDAQ. So I'm looking at the NAS. I want to see all-time highs. There has been a clear rotation out of tech stocks into healthcare, energy, mining, blah, blah, blah. So that's why the Dow is catching a bid. You can see Dow catching a bid, S&P catching a bid, Russell catching a bid, while the NAS stays flat. That's a problem. So I would like to see the NASDAQ continue higher and go into all-time highs. Then buy the pullback, buy the dip. So far, there seems to be a bit of a slowdown in the US tech stock market and even in the S&P. Like the S&P is not really moving much. It's kind of trickling higher. We should wait for the 15th of January. What I noticed after the 15th of January, a lot more liquidity, volatility kicks in because the big players, the market participants, the hedge funds, the managers, the this, the that, they all come back from vacations. So there's more participants in the market, thus more movement in price. So let's wait a bit. You know, it's the start of the year, it's the 8th of January. I think we need to see the 15th, and then we should get a bit more activity. Bitcoin doing nothing, Ethereum doing nothing. So Bitcoin and Ethereum, I am at this moment bearish on. So unless Bitcoin can go back above 100K, I'm not interested. I think we are right now in sort of a crypto winter, and nothing is going to happen until we go into the bullish part of the halving cycle and go back above 100K. So I have an alert set. If we go back above 100K, it's game on to look for buy setups. Until that, I'm leaving this one alone. So that's about it from my segment. I'm going to be streaming for tomorrow as well. Tomorrow is NFP, very, very important event. We're going to see what is happening with the rate cuts. Thank you very much for watching, and don't go anywhere because we have James coming on after me. So see you in, okay, wait like 2 minutes. Okay, so we're gonna wait for 2 more minutes. I'm gonna do, okay, James is here. Thank you very much for watching. See you tomorrow, and I leave you to Forex James. See you.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. How are you guys doing? Hope you're well. Happy Thursday, almost the end of the first week back in the markets. How's everyone been doing? Has anyone made a profit so far in 2026? James, is a losing streak for 4 days okay? Yeah, of course. Absolutely. I mean, it would depend heavily on your trading style and strategy and time horizon. So, for example, if you are trading a 1 minute time frame and you're taking 3, 5, 10 trades a day, and that's a 4-day losing streak, then probably not, because that's a lot of losing trades. But if you're just a day trader or a swing trader and you've lost 2 or 3 positions over 4 days, it's acceptable. But what I would highly suggest, if you are on what you would consider a losing streak, then you should absolutely go and diagnose if there's a problem or if it is just a losing streak. So one of the big things when you're trading is being able to identify the difference of a strategy that is no longer working in the current market regime, or flat out is broken. And having just a period where you're losing, because what you don't want to do is hit a losing streak and start messing around with your strategy, and then you end up down a cycle where your strategy is no longer the same and your results are also failing, because then you've got 2 problems that you've now got. Hey James, how are you? Check EuroCAD bias. Yes, we can have a look at EuroCAD. Let's see. No data, interesting. Data scanners, Forex scanner. Let's see what we've got on here. I assume there's no reading. Yeah, so we've got a -2. So slightly bearish. However, the overall score is neutral. So what we have got is a bullish seasonality. However, the seasonality of 0.24% is not enough, in my opinion, to use that as a confluence for a trade. Retail are also short, which would push me away from really paying any attention whatsoever. I mean, the neutral bias anyway is enough to sort of kick me out of the interest. But if, for example, you did want to go short because the EdgeFinder has got a -2, then you might want to then just reference this retail positioning. COT is also flat is also bearish. So that's a little factor. Trend reading, GDP, services PMI, retail sales, inflation is a bullish factor. PPI year on year is negative. So overall, there really isn't too much going on with EuroCAD. So bulls are saying if oil softens or Canadian growth data underwhelm, the euro's broadest policy stability and relatively more resilient outlook versus commodity sensitive CAD could support EuroCAD, especially with the Fed seen cutting more than the European Central Bank. So yeah, to be honest, completely flat. I'm relatively neutral on the euro. When I say neutral, I don't mean in terms of bearish or bullish. I mean, I would be happy to buy or sell the euro, but only against a very strong or a very weak counter currency. And this is basically what I call it proxy trading. I don't know if it's a real thing, but it's basically using a neutral currency as a way in to trade mainly the other currencies. Does that make sense? I do that with the Swiss a lot, which is my pound Swiss short, for example. Nice new haircut. Yeah, people have been saying that, but it's way too short. I mean, look at the size of my forehead. It's huge. It's crazy. So yeah, this is why I don't cut my hair short, because I'm very fortunate. My hair is very thick and very curly. So because I'm getting on a bit now, I'm getting quite old. My hairline's receding and my forehead's looking bigger. So the longer I can keep my hair, the better I look. Anyway, let's not go into the age conversation. A 4-day losing streak as a position trader, my friend, you cannot even have a losing streak over a 4-day period as a position trader. It's not possible. Oh, it's case sensitive. Interesting. Okay. But yeah, as a position trader, you cannot have a 4-day losing streak because position trades are over a very long time horizon. A position trade is basically an investment. So I don't think the problem is what you think it is. I would dig into what is actually going on. I'm happy to help you further, but there's very little more I can really tell you from that. Why is every country to register on DNA funding except Australia? Australia has got very, very strict financial regulations. I was actually going to move to Australia, but I couldn't due to financial regulations on elite traders. So yeah, that's why you will very often. It's the same thing with the US. The US has got very, very strict ones as well. But yeah, there you go. Which feature of the EdgeFinder is your favorite? That's tricky. It's a very good question. I don't have one, to be perfectly honest, because the EdgeFinder it's like a ecosystem, if you will. So it's not a case of I will go to the hold on, let me go over here. I would say, if I had to say something, it would just be the macro scoring only. I'm not a trader that really pays any attention to retail sentiment as a data figure. If I'm paying attention to sentiment, I will pay attention to social media because that tells me a lot of information. We spoke about this yesterday, actually, with my silver position. In fact, pretty much the only reason I liquidated silver at the top around was 83, 84 was because there was too much talk about it on social media. It's the same as like meme coins and crypto. When you see social media piping up and hyping up an asset, the chances are you should get out or even sell. I'm not saying you should actually sell, but you get what I'm saying. So yeah, I think the macro scoring is probably the best one for me because it takes into account everything that I actually care about, which is the macro data. However, I know this is sounding like a sales pitch, but I'm just trying to answer the question. What Nick added, which I think is really, really cool, is the scenario backtests. So a question I used to get on this stream quite a lot was about a software called Season AX, which is basically a seasonality tool where you can go back in and look at the average performance of an asset over 5 years, 10 years, 15 years, 20 years, etc. But that's pretty much all you can do. So I used to use it, but I stopped paying for it a few years ago. So this is basically an upgraded version of what you get out there. So what you could do, I mean, I'm sure you guys have already seen Nick talk about it, so I'm not going to explain the whole thing, but I think this is very good. So I also used a similar thing. So I'm not sure if anyone watches this stream a lot, but you may remember there was a period last year in 2025 when I was talking about the 9 weekly candles on gold. And that was I sold gold. I did very well by selling gold just on that formation. And this is the data that led me to that, really. It wasn't this data because the EdgeFinder didn't have it at that time, but it's the same idea. Does that make sense? So the markets repeat themselves. If you're looking at a huge anomaly in the markets or a repeating pattern, very often you'll see a very similar outcome. Okay, right, let me move on from that. Thanks. I was looking to go short at a zone. I think you probably could, but for me, there's no external factors, if you will. James, break-even week is fine. Yeah, of course, a break-even week is absolutely fine. Remember, the main job of managers or portfolio managers, traders, anyone involved in financial markets is capital protection. So as long as you're not losing money, you're actually doing very well. And then obviously capital growth is after that. Crowd SA is best. I'm not sure what that means. Welcome to the 5 Head Club. It's just because my brain's so big. I mean, drawdown trades, yeah, drawdowns are fine. Drawdowns don't count as a losing streak, in my opinion. Tony, good morning. Joshua, yes, I'm good, thank you. Hope you're well also. What is the EdgeFinder saying about DXY? Okay, let's have a look. I'm still just getting to grips with the new layout, so bear with me. Is it economic heat maps US? There we go. So nothing convincing to the upside anyway. Just 1 second. Okay, so the dollar impact from the data at the moment is 36.36, which is not good. Basically, if you're looking for an idea below 50, you'd kind of want to move towards a short bias. If it's above 50, you'd want to look more towards a buying bias. Ideally, 60 above is kind of like buy territory. And then what would this be? 40 and below would be sell territory. So the dollar is falling into a short position or a short bias, in my opinion now. So what we would need to do then is compare it to the others. So let's just see again, just bear with me. I'm still finding my way around. I'm not sure where the thing is where you compare them all. Anyway, so if we compare this to, let's just use the actual heat map. So the euro is at 60. So for example, euro dollar, just based on this, these heat maps alone, euro dollar should be a buy, or at least giving you sort of a sentiment to be a buyer. So we could have a look at euro dollar, and that's, you know, very easy to derive this idea. So let's just go over here. Now, just going to change the layout to a swing. Let's go 4 hours for now. Yeah, so you've got a couple of different things. Let me remove all of this. So if the EdgeFinder is saying that the dollar is weak fundamentally based on its actual data, and the euro is currently, what was it, 60? So relatively strong, especially comparing that to the dollar, you could be looking to potentially buy where it is. Actually makes pretty good sense. So we've got previous level of structure here. We've technically had the break, and this is now, again, technically the retest. Now, the downside, or the sort of red flag for this, in my opinion, for the way I trade, is that we've broken the 200. What I would have wanted to see is a sustained move up from the 200 when we touched it here. The fact that we came up, had this rejection, and now we're seeing sellers stepping back in, and to be honest, it is looking quite bearish on just the candle formation, is a little bit of a problem. So I wouldn't be buying it right now. But if this level holds, and we can see whether it be a bullish 1 hour candle close or a 4 hour candle close, whatever your criteria is to actually pull the trigger, a position long euro dollar from this level with a stop just below the previous low around here, I think is completely sensible. I actually don't mind that idea. So yeah, there is that. I also think euro dollar could potentially be due for a little bit of a pull back to the upside just on a technical basis. But anyway. US dollars breaking out. Yes, the US dollar is doing really well. Now, this is another thing is where do you stand on the dollar? So we spoke about this when I came back. I think it was it yesterday? It might have been yesterday, actually. But the dollar for me is in a tricky position because I'm getting pulled in two different ways. Technically, I really, really like the idea of being a buyer. So we've had the very, very, this just repeats. And again, do you remember earlier when I said the markets repeat themselves? Double bottom here, here, double bottom. Here, what did we see? We saw another double bottom. Now, if we also take into account the way that the market moves in cycles, let me just let's just use a rectangle. So we have decisive upside move. Sorry, I'm just trying to make the drawings a bit easier for myself here. So decisive move to the upside. Another one here. So whatever you want to call it, like bullish regime or whatever. Move to the downside, move to the upside, move to the downside, move to the upside. And then here we had a range. Move to the downside. Are we about to start the next phase, which could be, you could call it the expansion, whatever, it doesn't matter what you call it. It's very possible. It's very, very possible. So what you also need to think about is the markets are forward looking. So the argument that I'm seeing is the Fed's going to cut rates, AI is in a bubble, so that could affect the stock market in hand in hand with the economy. but the markets aren't looking at what you and I are looking at right now. The markets are always looking 1, 2, 3 months ahead of us. So we need to account for that. So the Fed cuts, in my opinion, are completely priced in. That's not the driver at the moment. The focus is now on the US dollar data. Because that's going to feed into, is the Fed going to pivot? Are they going to double down? Are they going to take it even further? What's the next move that we can expect? So it really, really depends on whatever we really get from the next Fed meeting, in my opinion. US CAD thoughts. Again, it's tricky because, as I just said, the dollar to me is looking bullish on a technical basis, but fundamentally it's looking very weak. Now, I would like to be a buyer I'd like to be a buyer of the dollar. However, again, as a fundamental trader, as a macro trader, I can't justify being a buyer right now. So let me just see here. So technically, dollar CAD is bullish because of the moving averages here. So we've got the 50 below the, we've got the 200 below the 50 here. So when I'm looking at moving averages and defining a trend, I'm basically just doing it with moving averages. So this would be a downtrend here because the 200 is above the 50. So there is that idea there. However, the fact that we have failed to really go any higher than this, we've created a new lower low. Prices coming up, showing rejection at this moving average, which could be the intersection to continue or re-establish a bearish trend, is questionable. Do I want to be involved? There's also this idea here. So again, that break and retest is looking really nice. Previous structure through here, broken below, going up for this retest, and then potential short. So yeah, shorts, they make more sense. Again, with the bearish EdgeFinder reading on the dollar, and again, that technical setup is looking relatively smooth. Bashi, good to see you. What you search, James? What you search, James, is now called FX macro scanners on bottom. Oh, is it? Okay. Thank you, Max. I appreciate it. B2, I was looking for a move from the 200, but the DXY held strong. Technically, I'm hoping for NFP to give the dollar clear direction. That would be good. Yes. So NFP is tomorrow. We've also got some other news for the dollar that you obviously will need to pay attention to. Bashi, yeah, I missed you too. It's been a while. What's going on with moving? Nothing right now. I've basically just come off a break. So yeah, nothing. Why PMI had more effect than jolts? Let me take a quick look at the data. I'll be honest, I only got to the desk pretty much 30 seconds after, 30 seconds before I came on stream. So what did we have? So we've had initial jobless claims. So that was today, wasn't it? Sorry, I'm just again catching up. So initial jobless claims, so jolts came, not jolts, initial jobless claims came out at 208,000, so it was below the forecast of 210. Then we had jobless claims came out at 1.91, which was slightly above the forecast at 1.9. So are you talking about jolts from yesterday? I assume you are. Let me have a quick look again at yesterday's data. Yes. Okay. So jolts came out yesterday at 7.15. Actually, I don't know why I'm using a calendar. Let me just go over here. So jolts came out at a bit of a discrepancy to the downside from the forecast. So actual came out lower is what I'm trying to say there. And then what was your question? PMI. So what was PMI? Where's that gone? Was it services yesterday? Oh, it was manufacturing. Yeah, services yesterday, 2.2. So it was a larger move. So the surprise was larger on PMI than it was on jolts, which is why it will have had a larger effect. And that's basically the way the markets move. As I said earlier, the markets are pricing in everything ahead of time. So if you're expecting a result of, I don't know, let's say 10, and you're buying, expecting that release to come out at 10, and it actually comes out at 8, you're going to want to sell some bags. However, if you're expecting 10 and you've been buying, it comes out at 10, that's going to either validate the thesis to continue holding that position. Maybe you could add in or take your bags, depending on who you are and the reason that you're in the position. But yeah, that's basically it. Of course, I simplified that massively, but for time. Live trade, more like investment analysis. No trade ever occur here. I mean, that's kind of valid, I suppose, but it's not investments at all. It's more swing trading analysis. We have open positions as well that we go over. But, you know, if you want constant trades and stimulation, there are plenty of other streamers that will that will give you trades. NASDAQ 100. Let's see. Where's my list gone here? I'm fairly sure we have a bullish reading. Last time I think I remember that. Actually, I don't think. Oh, we do. Yeah. No, we don't. Sorry, it's neutral. So NASDAQ's only got a score of 4 right here. So in my opinion, that's not good enough. When I'm looking for trades, specifically from the EdgeFinder readings, it has to be higher than 6. So 4, again, is reading neutral, technically on their scoring system. 5 is too close to 4. So if one thing changes, that's going to take it back to neutral. So that's a bit too close to the threshold. So 6 is my sort of minimum for a buy. Now, technically, I don't see anything just yet. The technicals here are actually really ugly because we are just sideways. There's no trend that we're currently in. And we can see that again with these moving averages, we're just parallel. There is nothing going on. Now, if you have a reason to buy, if you personally are super bullish for whatever reason it may be, I think maybe a buy towards here or like down here, maybe even these lows make lots of sense. And the reason, let me get rid of that. The reason this might be quite a good location is just because of the 200. So we can see bounce off 200, bounce off 200, bounce off 200, just expecting price to continue, respecting that moving average. However, I think a buy actually slightly lower towards here makes a bit more sense. I like that more. And the reason is because if we continue this sort of range bound movement, at least you might be in the position of sort of the low end of the range. So if we do end up continuing sideways, it's okay. You would be in profit for the majority of it. But for me, that's not really the way I like to trade. So there isn't anything here, technically or really even fundamentally. Looking fresh. I appreciate that, Bashi. James, should I take time to pass phase 1 or aggressive? It depends on your financial situation, to be honest, because I think you can go about it 2 ways. If you need the funding, if you're doing a prop challenge because you need it to pay some bills or because money's tight or whatever, then you should take it slowly and seriously. And also if that prop challenge costs you money that you can't afford or that you can't afford to sort of just throw away in terms of like fun money, then yes, you should take it seriously. So for example, if you've got 10K in the bank and the prop challenge costs you $200, that's probably not a huge deal. You could afford to maybe take a couple of different attempts. And that's just my way of thinking. However, again, if it's a large amount of money and you have to take every precaution to pass it because again, you need the money, then yes, take it slowly, take it seriously and treat it like a real account. So risk, 0.25, 0.5 per position. But yeah, I think it depends because some people like to use prop firms as sort of just a cash cow. They'll buy, maybe 5 or 10, 50K accounts and they'll just full margin the whole of phase 1, whole of phase 2. And then when they do pass, they'll treat it a bit more seriously. They'll reduce the risk to maybe 0.5 or 1%. And that's basically how they do it. But yeah, there are certain ways to sort of increase the probability of passing as well. I know that some people do, they'll risk 1% on the first position. If it loses, they'll risk another. But if it wins, they'll risk 2% and basically just keep risking the profit that they've made. So there's lots of different ways to do it. Check dollar yen. Okay. I'm not sure I've got dollar yen on my list. Bear with me. Sorry. Another thing I just want to mention with the prop thing is if you don't have a solid idea that you are going to pass it, you shouldn't do it because the statistic is extremely small. People can pass phase 1, people can pass phase 2, they can get funded, but then it's the people that pass phase 1, pass phase 2, get funded, and then get the payout to recoup the money they invested and make a profit it's a very, very small chance of actually succeeding. So unless you've got a solid strategy in place, you probably shouldn't do it in any way. So I think there's a guy called the Prop Firm Kid. I think he's been on the stream before. I'm fairly sure he has a strategy specifically for prop firms. And I know that a lot of prop traders have that, where it's a strategy that they only use on a prop firm and not on live accounts. But again, I'm not knowledgeable in that area. So dollar yen, let's have a look. I think being a buyer is probably just the most simple thing to do. There's not much to really discuss here in terms of technicals. I'd be waiting for this previous high to get hit. I'd like to see a rejection back down into the 200, retesting this level, which is what I've already got marked out. Then I would be looking to be a buyer and continue back into the previous high. So I've kind of changed my narrative on the yen. I've got to say, actually, I'll throw my hands up in the air and admit that I am really, I've called the yen wrong pretty much every time. So what I would expect now, whether you want to take this seriously or not, is that actually the yen is just going to remain the funding currency. They can continue to hike rates, but until their rates are reasonable in comparison to sort of G7, G10 currencies or central banks, it's going to remain a currency that people just buy and hold. Sell and hold actually, but buy and hold dollar, yen, etc. Because again, the rates are so low, you still get paid positive swaps. So the trend is just so easy to really get involved with. The economics behind the yen are also not the best. So I don't really see a situation where the yen is suddenly going to rally and we're going to see the yen is become, quote unquote, a normal currency, if you will. I never blew an account and I'm funded, had a few payouts, traded with 1 million. Very good, Bashi. That's a big accomplishment. People don't understand trading and where they sit within, how good they are. Yeah, I've actually got another video coming out pretty soon. I'll show you guys a little peek here. So obviously, the old thing, I'm just going to go over this bit because I think it's kind of relevant. But people will end up, this is an analogy, but I'm going to explain it in trading terms here. You'll end up going to the charts with a price action strategy, support and resistance, ICT, SMC, whatever it may be. And inevitably, the majority of people are going to lose because that's just the statistics. If you look at a lot of the content like ICT, 2 million subscribers, millions of views on these videos, TGR, millions of views on the videos, hundreds of thousands of subscribers. If those things really worked for the majority of people, then brokers wouldn't have 60, 70, 80% failure rate for retail traders. The stats prove that it just doesn't work for most people. So you end up trying to fix a strategy that initially doesn't work and won't work. And then you actually learn about the markets and realize that you are against top performers that you can't compete with. You can't compete with behaving like this. So, fund managers, institutions, hedge funds, people with billions of dollars, people with millions and millions of dollars worth of information and tools. And then you realize that you never stood a chance in the first place. So I think this isn't really on the topic we were talking about, but in trading in general, you have to realize what the markets actually are, who's involved in the markets and why. And that alone can give you enough perspective to say, okay, actually, I understand sort of the mechanics. Now I just need to understand how to capitalize on that. Does that make sense? That's a bit of a tangent. I apologize. 10% of challenges phase 1 and 2 get passed. 40% of funded accounts get 1 payout or go even. 0.5 get 3 to 4 payouts. 0.1% of people get constant payouts. Interesting. I think that's slightly more than what I have seen. I know Top Step released their stats and it was like 0.4% of people actually get a payout or something along those lines. But yeah. Anyway, guys, that is the end of my segment. I know we didn't do that much on the charts, but I'll be honest, my watch list is flat. I'm still completely or almost flat in my portfolio. All I've got is pound Swiss, and that's it. My fundamental biases or my sort of watch lists are pretty much non-existent right now, so I don't have that much to really go over with you. But yeah, anyway, guys, have a good day. Thank you for joining. Stay safe. Don't get margin called. And I'll see you all tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.